Well, hello YouTube. Let's have a look at the week ahead. And this week is going to be really jam-packed full of action. We're going to have a look at the economic news that's coming out. Then we'll have a look at the charts. But remember, all of this is in context of a broader idea that the economy is still pretty strong. Jobs are still overinflated. The Fed's likely to continue to raise interest rates, and stocks have been going ballistic. We've seen companies like Tesla going through the roof. We've seen strength in all the major stock indices, and really somewhat overheated across the board. And the Fed isn't going to be happy with that. We've got the interest rate decision coming up on Wednesday. We've got non-farm payrolls on Friday. Two massive numbers. But let's have a look at what's happening just in general, bit by bit. There's an awful amount of news coming out of Europe. And if I just sort of scan through that, we've got all sorts of stuff coming through here. The list is massive for Monday alone. We've got GDP coming out of Belgium. Just very quickly going through this, we've got economic sentiment out of the euro area. We've got GDP out of Latvia and Bosnia and Herzegovina. And then if we carry on down a little bit lower, we've got stuff coming out of Japan, unemployment, industrial production, and so on. We've got news coming out of Australia. We're still only on Tuesday by the time we get down here. We've got more GDP news coming out of various places in Europe, consumer confidence, and so on and so on. We've got, again, GDP in France going across this area here. Retail sales in Germany. We're still on Tuesday. PPI in France. And there's just so much news coming out of Europe, which is going to affect not so much the US dollar and US stocks, but certainly the euro against the dollar. And we'll have a look at that in context of what's going on with the dollar index, the euro being the largest portion of the dollar index. But let's go through to Tuesday, towards the end, unemployment in Germany, and the list just goes on and on and on. This is all still Tuesday. And it's quite unbelievable, really unbelievable what's going on Tuesday. There's almost no space for it. Wednesday is the big day, of course, and I'm just going to go straight down here, down towards the bottom. So we've got basically, there's a few other things coming out from Europe as well on Wednesday. Inflation rate in Europe expected to be quite high. There are expectations of still higher inflation rate in various parts of Europe. But then we get down to, and then Canada, we've also got the S&P Global Manufacturing PMI coming out of the US, the ISM Index PMI Manufacturing coming out of the US, and so on and so on. But the big number is 9 o'clock my time, which is in the afternoon. It's just before the close of play. Actually, I think that's 3 o'clock US time, Eastern Standard Time, is the Fed interest rate decision. Now, the current Fed interest rate level is 4.5%. It's expected that they'll raise by 0.25% to 4.75%. I think the chances of them not raising rates are very low. The chance of them reducing rates are pretty much zero. But the chance of them raising by 50 basis points, 0.5%, still exists. And although it's probably still unlikely at this point, we could see with the jobs numbers coming out. I forgot to go to, NFP comes later in the week on Friday, first Friday of every month, 8:30 a.m. Eastern Time is the non-farm payrolls jobs number. And remember, jobs are one of the very important components of what the Fed's looking at in terms of interest rate hikes or reductions or whatever it might be, in terms of the effect on inflation. And that whole scenario, in that whole scenario, jobs are really important. But are they going to raise by 0.25% or are they going to raise by 0.5%? I think the chances of 0.5% are somewhat low, maybe even very low. But I think the chance still exists. And considering the strength that we've seen in various sectors of the economy, particularly in jobs, we could be in for a slightly nasty surprise should they go to 0.5% and raise the interest rate, the overall interest rate, to 5%, which will mean that we'll see probably a massive drop in the stock markets, a massive rise in the dollar, and so on. If they only raise by 0.25%, I think the market's already priced that in, and we could still see a fairly dramatic move in the market, even if it's just 0.25, meaning that we might see stocks begin to drop and we might see the dollar begin to rally, because that 0.25% is probably already priced in. And as we go on through the week, there's more and more information coming out of Europe, loads of stuff coming out of Europe. We've got the Bank of England, we've got Euro area, more. We've got lending rates, and we've got the ECB interest rate decision coming out on Thursday at 8:15 a.m. Eastern Time, and it looks like they may raise by 0.5%. It's expected, if you look further back in what we've just been through, that the inflation rate in the European zone or Eurozone may well increase in the numbers that come out this week, and it looks like they may raise by 0.5%, which would put upward pressure on the euro in comparison to the dollar. So there are all these interest rate decisions going on, and different countries raising at different times and at different rates, starting from different base levels or current levels. So it's all going to be quite topsy-turvy and really interesting. And then on Thursday, we've got jobs again, jobless claims, which have been strong. Jobless claims last week, Thursday, were less than expected. And who knows what we'll get this week. Certainly by the looks of this, the expectations aren't much change. We could get, maybe it'll tick up a wee bit to 200,000, but it dropped last week. Jobless claims, continuing jobless claims, and then on Friday is the next big number. We got so there's some stuff coming out from Australia, but Friday, if we can find it here, should be 8:30 a.m. Eastern Time. I had to actually switch to the web version of it. So it looks like there's too much information to be contained in the email version, which I was on just now, which kind of ran out of space, it looks like. But here's Friday, February the 3rd, non-farm payrolls, 8:30 a.m. Eastern Time. And, well, we've had very good numbers, very strong numbers, all of them well over 200,000. And we're expecting to see perhaps a drop below 200,000 at 168,000, and unemployment rising just a fraction, really, from 3.5 to 3.6. Whether we'll see that or not, I don't know. And also remember that the interest rate decision takes place on Wednesday, or at least the announcement of the interest rate decision, which will have already been discussed in the meetings prior to that. And we get Jerome Powell's statement or speech straight afterwards, like half an hour afterwards. And what he has to say about rates going forward might even be more impactful than the number itself. So that's all the stuff to look forward to going forward into next week. A huge amount of data coming out from Europe. And on top of that, we've got the interest rate decision coming from the Federal Reserve, the FOMC meetings, and we've got non-farm payrolls on Friday. And we've got the ECB interest rate decision as well earlier in the week than that. So a massive week for news. How that's going to affect the markets, I don't know. I don't think anyone really knows. We've seen, as I said earlier, the stock markets just exploding higher, still at pretty critical levels, not at the same levels we were last week, but we're now at the next critical level, which is going to be really important. We'll have a look at the stock markets, we'll have a look at the dollar index, but all of it is going to be really tricky to trade, and it's not for risk-taking, it's not for the faint-hearted, and it's not for those who feel that they know which directions these markets are going to move, because everything's really up in the air. Let's have a look at the charts and explore those a little bit further. I'm just going to go through some of the major ones. major currencies, some metals, and stocks. And let's have a look at, before we look at the euro, just let's have a look at the dollar index, because we've been keeping a very careful eye on the dollar index for a long time. If you look at this, really, so we're sort of hovering around. This is critical support right now, between 100 and 150 or so, 101.60, and then just below that we've got 101 and then 100. Those are the key levels. And if I just duplicate this line and make a clone of that and move it down to 100, which is the big round number, and also psychologically a dividing point, you could call that parity, really, the 100 level, parity with the other currencies. So that's the sort of normal resting place for the dollar. And we might see a move down to 100, a spike through there. I guess we'll find some support, perhaps after a false break if we do drop that low. Having said that, what we're doing right now is trying to form a bottom still, and the downward movement is not convincing. So on Friday we saw yet another attempt to, we did manage to close on Thursday. We closed beneath this line, which I've been talking about, at 101.65. We did close beneath that on Thursday and on Wednesday, but on Friday we closed back above it. And Friday's candle had a higher high and a higher low. And if we look at the weekly chart on dollar index, we've got two doji candles in a row right now. Now, these are not reversal candles, they're hesitation candles. But what's critical about these two candles is that it's almost two doji candles in a row with a tweezer bottom. A tweezer bottom is formed when two consecutive candles, have an identical low. This is not identical, but it's pretty close to being identical. And the fact that we've got this somewhat of a tweezer bottom with two dojis in a row at critical support and closing above that support level at the end of the week makes it really interesting to consider the potential of the dollar rallying up back up to perhaps the 105 level, which is where this line is. And you can see it's an obvious level on the weekly chart. Previous resistance, support, 3 weeks in a row, support for another week, then a breakthrough, then it became resistance once and twice. So that level there, it's also where the 100-day moving average is. So really critical level, that 105-ish level, and a really critical level where we are now with two doji candles and a tweezer bottom. So can the dollar find support and rally up from here back up to 105, or are we going to have to probe lower down to perhaps this 100-week moving average at just below 100? Actually, it's about 99. So I don't know. And, all of these numbers that we're throwing out and levels on charts right now are going to be very dependent on what we see coming through in things like all those European numbers. When we're talking about the euro and the dollar index are pretty closely correlated. So let's talk about them together. All of these numbers coming out of Europe. We've got some numbers coming out of Australia. Go and have a look at that. You can get that on myfxbook.com or any other of the major Forex or trading broker sites or whatever. They all have economic calendars. Go and have a look at what's coming out of Europe. But Wednesday, we've got the FOMC interest rate decision rate announcement, plus Chairman Powell's speech or statement thereafter. And then on Friday, we've got non-farm payrolls. Those are the two glaring headlines that are going to move this market one way or another. And those are the ones that we're going to have to be very careful of, be very attentive of, and really expect anything to happen. So like I said earlier, it's not a time to be predicting what might be going to happen in the markets this week. So that's the dollar index. And when we have a look at the euro, that's the weekly chart. I'm just going to change that back to daily chart. So there's that daily chart. And yesterday, Friday, when I say yesterday, last trading day, has a higher low and a higher high, but not really a higher high actually. A parallel, actually, if you want to take the bearish side on the dollar index, we've actually got a tweezer top on the daily charts here. Perfect tweezer top, these two candles. So there's an equally good argument in the shorter term picture for a topping tweezer pattern here on the daily candles. But I guess if you look at the weekly candles and look at this tweezer bottom on the weekly charts, the longer time frame, kind of overrides the shorter time frame. But, you know, there you go. It's a higher low, bullish candle closing above that support line, but potentially a tweezer top, not quite a higher high. Now let's have a look at the euro. We've talked about this as a video in on this channel about this ascending triangle on the euro. Not ascending triangle, ascending channel or rising channel on the euro, and how we've had to trade this, how difficult it is. But Friday formed, we had a tweezer top between Wednesday and Thursday, which is great. Those two candles there, beautiful tweezer top. Actually, not quite tweezer top. We had let's have a look at the weekly chart on the euro, and we're seeing this across a couple of currencies. A little spike high. We closed the week at the same price that we opened it. And again, a potential reversal pattern. Having a look at the daily chart, we're still stuck in this channel, but a topping pattern there, not quite a tweezer top, but perhaps potentially a dark cloud cover candle, although this is the daily time frame, it's not the weekly. And then yesterday, Friday, keep on saying yesterday, I mean the previous day's trading, we formed a lower high and a lower low. We're still above the channel bottom. We're not out of this channel yet. There's still much of a chance, a big chance, that we'll have to go back up to the top of the channel before we continue. And like I said, with dollar index and euro and everything else that we're going to look at, a lot of it depends on what news comes out of these meetings and reports, interest rates, all the stuff out of Europe, interest rate decision in the US, and non-farm payrolls. I don't think we're even going to look at the other currencies because they'll all fall into the major currencies. They'll all fall in line with that. But we've got the EuroCAD, which we're short on. We were short. I can't remember if we still got a position open in this. I don't think so, actually. If not, we'll probably consider reopening a position on it on maybe the opening of trading tonight, Sunday night. But we've got a bearish engulfing candle on the daily chart, and a double top. Now, if you look at this chart on a weekly basis, on a weekly chart, this currency pair, EuroCAD, we've got a beautiful, beautiful tweezer. That is a genuine tweezer top on the weekly chart. This is one of my favorites, along with Australian dollar yen, which we'll talk about shortly. Tweezer top, bearish engulfing candle against the 200-day week moving average in this case. That's a really good signal. Plus, on top of that, it was a false break above this previous high. So false break higher, touching the 200 MA, bearish engulfing candle with a tweezer top, and closing quite weak on the day and on the week, if you know what I mean. So that looks good for a short still, and the same goes really for all the CAD pairs. We've been trading the CAD pairs short this week, and we'll continue to look to do that. So that's Australian dollar CAD, Euro CAD, pound CAD, Australian dollar CAD, and then New Zealand dollar CAD. I'm not too worried about that one. I'm not going to repeat what I've said repeatedly on the yen pairs. The only one I'm particularly interested in right now is the Australian dollar yen, and I expect this to respect what we've been talking about, this overall pattern, the 200-day and the 100-day moving average confluence, the 61.8, sorry, that's a 50% Fibonacci, the channel top, and this overall pattern, crowning pattern, looking for a move down towards ultimately down to about 80, but let's start with 85, 86, 84, and then down to about 80, and looks perfect for a sell to me. We'll know if we're wrong by this breaking up above essentially the 93.50 level. Any close above 93.50 will invalidate this analysis, but so far it looks good. And I think we're going to see more strength in the yen. We've seen inflation rates increasing in Japan. There's going to be more inclination to increase interest rates, which will make the yen more attractive, the carry trade less attractive, and potentially a nice move down in all the yen pairs, including dollar yen, which actually might just have to move up a little bit first. But if you look at Australian dollar yen, euro yen, pound yen, CAD yen, all of the yen pairs look good for shorts to me at this stage, unless we get this invalidated. Now let's quickly have a look at Nasdaq, S&P. We were scalping these stock indices on Friday, very successfully, scalping off these highs. You can see we did drop back a bit. I don't really want to talk too much about stocks because these are going to be decided by what news comes out in terms of interest rates, basically FOMC decision, the FOMC decision on interest rates, and NFP on Friday. So Wednesday, 3 o'clock in the afternoon, thereabouts on Eastern time, and then 8:30 a.m. on Friday Eastern time. That would be the FOMC and the non-farm payrolls. I've put a couple of videos up on this channel as well about NASDAQ. We've closed well above the 200-day moving average. We've seen a 70-something% rally in Tesla. We've seen EV stocks rallying. We've seen all sorts of things. Remember, we've got earnings, loads of earnings coming out this week on many of the big NASDAQ and tech companies, which will affect both the S&P and the NASDAQ. Massive reports coming out, massive companies, the biggest companies, and the most potentially market-moving companies. On top of all of that, we've got NFP and we've got interest rates. So this week's going to be huge. Probably one of the most volatile and interesting weeks that we've seen in a very long time. So be careful of all of that. Don't stick to a direction and assume that you're going to be right, because there's all sorts of opportunity to be wrong in analysis on this market, and a lot of it is going to be news, earnings news, and economic news dependent. When we're looking at gold and silver, I'm not going to talk about any of these. Natural gas we've talked about. We were stopped out of natural. Actually, our contract was closed. Futures contract was closed, but we would have been stopped out anyway for a 1% loss thereabouts at about $2.90. But really want to, and we could move down to $2.50 on natural gas, but we'll talk about that in a separate video. Or we may bottom where we are at the moment. But when it comes to gold, I've done a whole video on gold. Please go and look at that. Have a look at that, because I don't want to spend too much time on gold here, but we've got potentially a rise up into higher levels, really. There's no inclination for this to move lower at this stage, and every time we probe a wee bit lower, you can see all of these lower wicks on gold. Big rejection from this level at 1920, not getting below there. Every time we've tried to move down there, we've been rejected higher, and I don't like the look of gold at all for shorts at the moment. Although, having said that, Thursday was a bearish engulfing candle with a tweezer top. So keep that in mind if you want to be shorting gold. And we may even ourselves have a go at this, but it will be with a very small position. It'll be on rallies up a little bit higher and with tight stop losses above this top. We've been selling gold all the way up and making small, overall we've made a fairly neat little profit on gold, but we've been trading small positions, very tight stop losses, been very nimble on it, and being very wary that gold potentially could move up to this channel line at the top here, and this red horizontal line, and even a blowout like we've seen over the last few occasions when we've approached the 2000 level. So big blowouts there, blowout, 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 and we haven't seen that yet. I expect that we might need to see a blowout on gold before we see any significant reversal back downwards. Seems to be the nature of gold, the whole gold rush type thing, and then the gold rush peters out. But there's perhaps got to be a gold rush before it peters out. Silver, I like still pretty, I think it's going to pretty much follow along the same lines as gold, but this is looking a bit more hopeful. We've still got this dome beret top, and the rejection on silver is coming more from the top side, whereas gold is coming more from underneath at 1920. Silver we're rejecting from the top side more often at 2450. And with a bit of luck, we could see this move down to 22, 21, or even 20. I've done a whole video on that as well, on a video which I'll link at the end of this particular video on gold and silver. I've got two particular videos. Have a look at them. There's one on NASDAQ. There's one on gold and silver. And I think that's all for now, folks. Be very careful this week. Be very nimble. And don't commit to any long-term direction. Wait for the dust to settle. There's plenty of time for you to have a look at what's going on during the week. And if the markets determine a direction and make a decisive move one way or the other, which they probably will, There'll be time enough next week to start to position yourselves into the new direction in the market.